Volkswagen has emerged as the world's most indebted company with $212 billion in total debt. This comes as the overall increase in corporate debt reportedly reached a record $8.18 trillion, driven primarily by mergers and acquisitions. Volkswagen's borrowing, alongside other major players in sectors like healthcare and automotive, reportedly highlighting how companies are leveraging debt to finance growth and expansion. And as high interest rates continue to impact borrowing costs, these companies have been balancing the need for capital with the pressures of rising debt servicing expenses. Corporate borrowing was heavily influenced by major acquisitions. Automotive giants, including Volkswagen and Toyota, increased their borrowing to meet rising working capital demands as they finance customer sales. Even with high interest rates pushing debt costs higher, companies remained committed to rewarding shareholders through dividends and buybacks, with many borrowing to bridge the gap. When cash flows fell short, Volkswagen's debt remains the highest, signaling the scale of borrowing needed to stay competitive. The rise in corporate debt is not without its challenges, of course. However, larger firms with more diversified debt structures have been able to manage these higher costs more effectively than smaller counterparts. While the overall debt surge was driven by strategic acquisitions and investments, companies are now grappling with higher interest payments, which may continue as central banks maintain elevated rates. The future will depend on how well companies can balance growth with the costs of financing. To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.